Hey everybody, I'd like to introduce you to my new book. It's called From Insight to Upside: Mastering Convexity Investing with Value Options, Qualitative Analysis, and the Wisdom of Legends. This is a book I put together written from the perspective of someone like me 30 years ago who was interested in stock market investing. The concept there was to demystify investing for a 20-year-old person. I'll be 50 this June, and 30 years ago I was in engineering school and I had an obsession with the stock market, which I hope many of you do too, because it is a fantastic place not only to make money, but to have the intellectual pursuit of making money, which I think is even better. The actual problem solving that needs to take place, the mental acuity you need to have, and what I'd like to do is tell you about the outline of this book. It's a 14-chapter book. I put it together again with the intelligent and educated person in mind, but someone who doesn't have a background in economics or finance, a business person that is interested in owning fractional interests in business. And that's what this is. The stock market is exactly that, a place where you can buy fractional ownership of a business. A lot of times people are confused about that, particularly in the media, I find, because it's better to make something seem mystical than it is to just strip it down and say, at its essence, you're buying a piece of a company. So, first chapter I entitled Contrarians Only, right? I think the stock market is a great mechanism for working as a contrarian, because often you are buying something. You are buying something from someone that they've thrown away. In other words, it's like visiting a junkyard. Often it's like visiting a garage sale, or in more modern times, going on eBay. So a contrarian will go to eBay and find something like a set of baseball cards or a set of comic books, antiques, that other people have viewed as trash and you see as treasure. So as a contrarian, you can do very well in the stock market. The second chapter is called We Can Be Heroes. We Can Be Heroes, great David Bowie song, but it talks about the heroes of the investment world. I think you need a map, you need a guidebook for any kind of endeavor. The stock market is a place where there are great people out there who have already set a path for you, and I talk about it. Chapter 3, we talk about quantitative and a qualitative style and the funnel. A quantitative style of investing is just that, numbers. You're looking at basic and sometimes not so basic measures that you can calculate. Everything from the well-known PE, or price earnings ratio, all the way to more esoteric measures. We'll talk a little bit about those. On the other end of the spectrum is a pure qualitative approach. Qualitative approaches can range themselves from your uncle gives you a great stock tip because he likes the new sneakers that have been introduced by a company and thinks that's a winner. It stops right there. Or a qualitative approach, which includes visiting the mall, visiting car dealerships, doing your research online to see how the company is doing relative to its competition and relative to how it advertises itself and positions itself. The funnel, which we talk about, is a process of elimination, right? The idea that you start with a lot of different stocks, a lot of different industries, and you narrow it down, which leads into the fourth chapter, which talks about that. You go with what you know. You're on the way to becoming more than a novice investor, but at this point, you want to rule out areas where you don't feel fully competent or confident. there's no sin in saying that there's industries you don't fully grasp or that you're not fully interested in. That's fine. You can make a lot of money narrowing it down to one or two industries that interest you and focusing heavily on those. There are professional funds and professional money managers who do precisely that they're sector funds. And of course, for those who want to look at sector ETFs, exchange traded funds, it's a good way to think about the industry as it's split up, sometimes arbitrarily. I mean, we'll get into that, but sometimes the industry groups overlap, and sometimes you'll scratch your head as to why they're picked that way. Chapter 5, the next logical step is to go with company selection. You'll select or learn how to select a group of companies that you're that are going to be on your watch list. Chapter 6, we talk about the competition. I think importantly, the competitive landscape is the thing that defines your knowledge of a company. If you don't know what companies are aiming to destroy your investment, then you haven't done the work. I mean, and so the simple example is McDonald's, Burger King, and Wendy's management teams would do a very large celebration if the other two went out of business. And that's the simplistic way to think about it. But if you can't sit down and define within a circle who the competition are, and it may be competition from the future, right? So thinking back 25 years, who was Dell's and IBM's big competitor? Apple. And now Apple is at the top of the game. NVIDIA these days, 25 years ago, Intel and AMD and others were competing for that top spot. And you see what I mean. So understanding that. And as a corollary to that, you want to know the investment moat, the Warren Buffett idea, and we borrow a lot from him, of a castle's moat, the place where the water and the alligators and the mean things exist to keep you out of the castle. You want to see how your management team and think about how your management team is building that moat. Chapter 7, we're halfway there. We talk a little bit about things like the PE ratio, relative valuation, asset valuation, and stock screening. You realize that we're getting into more quantitative measures, but measures that you could do on a spreadsheet or a calculator with very little effort. It's not complicated. It is difficult, but these ratios are quite easy to understand, and I want you to see these tools. We go a little deeper in Chapter 8. We talk about the free cash flow to equity model. Don't get scared. We'll go through it, and in fact, I'll discuss it later. But when you understand how the free cash flow is generated by a company, you can then figure out how to value the company based on the cash it generates. The same way you would look at buying a private business, your local candy store, your local tavern, your local gas station. You would go and ask for the actual cash flows because you'd be buying that business potentially to support your family. And when you buy a business in the stock market or in the private market, you want to see how the cash is generated and then make a valuation. Chapter 9 ties together different places, many of them free, almost all of them are free, where you can find the financial information. Of course, our SEC, the Securities Exchange Commission, requires public companies to publish all of their financials every quarter and every year. So you have a great advantage in the United States, not just, but in the United States, fully functioning capital markets. And one of the great things the federal government does do, among many things that they don't do right, is they have a free clearinghouse, the SEC's Edgar site, which enables you to search for companies that are public and their financial information, and it's easy to find, and it's very easy to work with. In Chapter 10, I go into the qualitative element of it, how to read your management's discussion and analysis, what to look for in the verbiage of a 10K, a annual statement, or a 10Q, the quarterly statement. There's a lot of nuggets in there that management leave for you in the annual and quarterly reports, and they're all available to you and anybody else who has an internet connection on sec.gov. Chapter 11, I title Scuttlebutt. This is a really exciting chapter because the term scuttlebutt borrowed from another hero, Phil Fisher, who wrote Common Stocks and Uncommon Profits, which I have right here. The book talks about how you can do your qualitative investigation, where you act like Sherlock Holmes and walk around companies and talk to competitors and go to the different places where you can find out information, and sometimes it's online as well, about the companies in your portfolio. This is a lot of fun. Again, if you don't enjoy it, this book that I've written will help you ask the right questions of your advisors who do buy the stocks for you. See if they're doing the scuttlebutt. But I'll tell you, your ability to do scuttlebutt is limited by your imagination. It is so much fun to investigate companies, even at your local shopping mall. Go down there and you'll have a new perspective on questions to ask and how to count customers going in and out and seeing trends. You'll become a very fun person at cocktail parties. Chapter 12 is about mindset. Okay, so one of the things that you need to get in your mind is a proper framework for the psychological element of investing. I tell you right now that this is fun. This is not complex. It is very difficult. The difficulty comes from the contrarian part. You're buying stock from someone who has sold it to you. You have to square the proposition that perhaps they knew more than you when they sold. What was the mindset of the person selling to you? And you need to, through your own hard work, understand you've established that you bought a business at a discount. When does that discount close? You want fewer sleepless nights, but obviously investing is a risky proposition. You do have the ability to lose everything, even on very soundly researched companies. I'll give you some of the tools that I, as a professional, I've done this for 25 years plus, what I do to keep the mindset positive. You're having fun. It is your fortune that you're investing, and you do have that at risk, but there's ways of mitigating that, or else everybody would just put their money in a mattress. Chapter 13, implement. Once you've gotten the tools together, you've done your competitive analyses, you've done your mode analysis, you've valued the business, you see the stock market's giving you a discount. The next step is to implement, and I give you some ideas on that. This book that I put together is 162 pages long, including the conclusion. 162 pages does not do this great vocation of mine, which is investing, any justice. It's just a beginning. It's like giving somebody a paintbrush and some primary colors to get started. But what I'd like you to do, certainly I'd like you to click below and go buy my book, but I'd also like to be engaged with you because the questions constantly come up. That's the fun of this. It's a constant learning process. You're constantly learning new ideas and getting new data about your companies. And this gives you, my book, gives you the framework for understanding the right questions to ask of your investments and ultimately of the people who do it for you. So thanks for listening. Click below if you'd like to get more information, and I'll see you soon.